video that I want you to enjoy. It is today's video because the moment you watch this video till the end, you'll understand why I'm saying that way. So hi guys, how are you doing? Welcome back to my diary. If you're new here, in this space, I talk about forex related stuff, the mistake I've made, and most important, the lesson that I keep making every day so that I can share with you. If you find this video very interesting, kindly hit that subscribe button, comment, tell me what you think about the video, and let's grow together. As always, I do analysis of the pairs that I feel like I want to give you for a free setup. Then we come back and check if ever the analysis have already gone or if the market has not played the way we had already analyzed. And even before we go to the market, let me give you a summary of what you're going to see in the chart so that you can understand what I'm saying. So you have to watch this video until the end so that you can understand. So I did analysis on Eurocard, and I was saying Eurocard will give us around 200 pips. If this happen, you can just go and watch the video maybe after this one so that you can understand the result of the Eurocard. Now when you come into the market, there are two scenarios that happens in the market. By now you should know that the market will either go up or down. You have to know the market can never do anything else. It will either buy or sell. And this is the first scenario, so that you can just go to the chart because you want to see what happened to the market. This is the first scenario, and in this case, I'm always using a simple concept of support and resistance where it is as easy as possible. Okay, there are so many lessons that you learn from this video, so you have to really watch the video until the end and ensure that you share this video to your friends so that they can also watch, because I know there are so many people who will move from one strategy to another uh, because probably the setup did not work. So you have to ensure that you are generous to your friends. So this is the first scenario where the market, I keep saying the market will never go on a straight line. By now that should be like in your head now. If you love watching my content, I know by now you should have already be familiar with this kind of a setup. This is how the market moves. The market comes down like that. The market again comes to this zone. It comes again there. It can be going up faster or even slow depending on how the volatility of that market is. It can range all that, but at the end of the day, this is the first scenario. Yes, you can say this is a bull market because the market has been breaking toward the upside, and after a long period of time, our market, it comes to this range. You see, the market comes to this range. So the first outcome of the market, yes, you know the market has been bullish because it has been breaking toward the upside, and after a long period of time, the market starts to range around this area. It can come from the weekly, from the monthly, from the daily, even the 4. But now when you go to the lower time frame, no, that one is not a strong one, but we want the ranging to start from the higher time frame. And the first scenario that can happen to this market, if you want to enter the market, before we go to the chart, the first scenario, if you want to enter the market, if you want to sell the market, of course, you have to wait for the market to come to this area. This area is a resistance, so you have to wait for the market to come to the resistance so that you can start pushing the market toward the downside. Again, if you want to buy the market, you have to wait again for the market to come to the support, and then you can do what? Then you can start buying the market. That is the first scenario. The second scenario, you have to wait for a ranging to break. So you have said already this is a ranging market. You have to wait for the whole of this range to break. Then, if you are patient enough, then you wait for the market to break either toward the upside, like this one, toward the upside. Then you wait for the market to retest, and you continue doing what? You continue buying the market with the overall trend. Or you have to wait again for the market to come to the support, break the support, and do what? And now you have to sell the market. That is the only outcome that you have to wait, because at the end of the day, even if you have a ranging market, you still have to know the market can break either toward the upside or the market can break toward the downside. So you have to be aware of those things, because there's no way you can say the market can be ranging, but you don't know the market can also break either side. So you have to know, if in case this one happen, this is what I do. In case the market breaks toward the downside, then this is what I still do. But at the end of the day, the entry will always be the same. For you to know the market has already broken, of course we'll have to wait the market to come and retest. Unless we have very strong news, then the market sometimes will not retest. But in so many cases, the market at one point it will come and retest. And in that case, for retesting, if the market like broke toward the downside, the deep retracement or the retracement that people say, we call it a new lower high, because the market has already broken the structure. And in this case, the structure was this zone, which was our support, becoming our resistance. So we have a new lower low. The market at one point it will come back and create a new lower high. Why am I saying that one? A new lower high, because the market, as long as the market is heading towards the downside, we expect the market to create new lower lower, new lower low and new lower high. So the moment the market comes back, creating a new lower high, indicating that the market does not want to go beyond the resistance, because if the market has already again broken the support, we have a resistance. So it is our time to go to the lower time frame and do what? And find entries. I hope by now you have already understood. Now let's go to Eurocard. I'm not going to do a top-down analysis, because this is the result of what happened. I've even not removed the drawing, so that at least you can be familiar with what I'm trying to say. This is Eurocard on the daily time frame, and even if I just go to the weekly, so that the video can be quite, you can just catch up with what I'm trying to say. You can see this market, it has been buying. Can you see? The market has been, yes, it has been a bullish market, but saying it is a bullish market, it doesn't now mean that we have to buy the market more. We have to concentrate on the current market. And I did a video about backtesting. Now this is the best time for you to understand what I was saying about the backtesting. So backtesting this live market, it is easier, because I did analysis before the movement of the market. Now it is time for me to come back and look at my analysis. Did they all go the way I had explained? Did they fail? What are the lessons that I'm learning from all that? You can see this market, already I've said the market has been consolidating around this area from the daily time frame. So from the daily time frame, I mean each and every candle here, it represents a whole week, which has 5 days in our case, because the market moved from Monday to Friday. So this is how the market has been behaving for so many weeks. The market has been ranging around this area. And the first scenario I've said, you either wait for the market to come to the resistance, then you sell, or you wait for the market to come to the support and you buy. And in case the market breaks towards the downside, now that is where we go to scenario number 3. And this is how I was saying, Eurocard, we have a potential of buying around 200 pips, because the previous one we were selling the market because of the US election, and this is how the market went with 1 hour, a 1 day candle. It went for good 200 pips. But in this case, the market is not buying. The market has already broken our resistance. The market has already broken our support. And what have I said? When the market breaks our support, it now becomes a resistance. Okay? The moment the market breaks toward this zone, which was a strong support, because it is a zone has been tested like more than 2-3 times, so it indicates now the sellers, they are strong and they want to push our market further down. And you can see how the market broke this support, and the moment the support breaks, it becomes our resistance, because we cannot buy at resistance. When the market is below the support, we are supposed to be buying. It automatically becomes our resistance. And coming here, you see how the market here came, it broke toward the downside, it came back and it tested. And you see how the market has been going. Before even you go to the lower time frame for entry, you see how it created a new lower low. It came back to our support stroke a resistance, indicating that the buyers, they don't have the momentum to push this market toward the upside. You see, they could have come to this area, but we were anticipating, because this is the area that we were hoping the market at least will give us an entry to buy. But now you can see that whenever the buyers try to push this market up, they never had that momentum. So we have, this is a new lower high, because this is the last structure the market went to, creating a new lower low. So this is where the new lower high is, and currently you can see the market is heading toward the downside. And if again the market breaks this area here, we again hope the market will just come back like this, create a new lower high, and the market will continue going down. But for now, let's see how the market even went toward even to the lower time frame, so that we can judge, do we still have to shift this strategy, or do we still know that it does work, only that it was not the right time for us. This is the daily time frame. When we go to 4 hour, it is still the same thing. The moment the market broke toward the downside, you can see how the market went. If it becomes hard, now if you already know the market now has already broken the support, what am I supposed to be doing? I'm supposed to be selling the market. I cannot be buying the market, because all my criteria for me to buy the market has already been violated. And what the market is doing as of this moment, it is giving me sell reasons more than the buy reason. The first one, the market is below the support. That is number one. So the market is below the support. I cannot buy the market. Number two, the market has already created a new lower low, and now I have a potential new lower high. What am I supposed to be doing? I'm either supposed to wait for my market. If I still want to buy, I have to either wait for my market to come to the support, break toward the support, come retest, then I can continue the same process of buying. But if it does not do like that, then I'll have to wait for my market to come toward the resistance. If the buyers are rejected toward this same area here, if the buyers are rejected toward this around this area, it is an area, it is not a point, it is an area. If the buyers get rejected, then I have to look for my entry. Okay. And now, if it becomes even harder, use the line chart and try to see, what do I see? What is happening at my resistance? So all the thinking they're telling me, no, you should be buying, you should be selling the market. What do I need to sell the market? I need a simple pattern, and I need a candle that will give me the hands up to enter the market and hold the market maybe to the TP, like at least you see how I'm arranging from the higher time frame to the lower time frame to the entry. Entry should be the last thing after you have all the confluence. So when you come to the 4 hour, what do you see here? I'm using a line chart because the line chart is easy to see compared to the candle. You can see this is how the market is behaving toward this area. I did another video about sniper entry. So this thing, they do happen often, so many times. So whenever when you come to this chart, you can see the market is ranging toward this area. Can you see how the market is ranging? Now this is on 4 hour. We have not yet gone to the 1 hour to get an entry. So what do I see on this 4 hour? I can see a pattern, and this pattern, it looks familiar. This pattern is a head and shoulder. If you don't know how a head and shoulder is, this is how a head and shoulder is created. And if you have a head and shoulder, again, it tells you should be selling the market. But if the head and shoulder was inverted, then it tells you should be buying the market. So we already have a head and shoulder, and the head and shoulder is already at where? The head and shoulder, it is at resistance. Can you see how the market is telling you now? You don't have to buy the market, you are supposed to be selling the market. If I go to the 1 hour, because you cannot enter with the 4 hour, I still have to go to the 1 hour to see now what again. Do I still have all the confluence? I still need to know, do I still need to enter this market? Or maybe the buyers were just tricking us, and at one point they'll now start buying the market. When I go to 1 hour, can you see the same thing is happening? And even in 1 hour, you can see something like a double top, and the neckline was broken. Another bigger picture of the head and shoulder. You can see the head and shoulder here coming this way. and now you already know, oh, I'm supposed now to enter the market. When I go again to the using the candle, if the line becomes confusing, you can just switch to the candles, and all this you want to use them so that we can enter the market. I want to know now already. I have already know this is how my market is behaving. But at the end of the day, I just want to see a very good candle showing me that it is time for me to enter the market. And what I want to see just a bearish candle. Okay. Can you see this one? This is a very good example of a bearish candle indicating to me it is time for you to enter the market. What are you waiting for? The market is already ranging toward this area. I have a double top. You can see this double top. The neckline was broken. It came back and retested. And now I want to see a bearish candle indicating it is time for me to enter the market. And when you see all these things pointing toward us for us to enter the market, immediately that candle closes, what do? You enter the market, and your stop loss will always be above this previous lower high, because each and every time frame we will always have lower low and lower high, or even high high and high low. So our stop loss should always be above the last or the current lower high that has been created in this case, because we are selling. And our TP, we have to go to the higher time frame. Remember, if the stop loss you are not even again sure, you can just use the 8-year, you can use the moving, all those moving average. But at the end of the day, at least you have a reason for you to enter the market. Whenever you have this bearish candle, it clearly tells us that the sellers are in control. There's no way we can buy this market unless now that the buyers come up, break toward the upside, breaking this structure, and now we shall start to say, okay, the market does not want to go toward the downside. So this is how the market is behaving. You enter the market, you go to the lower time frame, that is the 4 hour, and look where is the market most likely to go to. Where do you think the market will break the first structure before it starts to consolidate or even to go up? And you can see this is where the market first came. Let me put like this. This is where the market first came. Let me put this one straight like like that. Just a minute. This is where the market first came. Where I want this one to be straight like that. This is where the market first came before it started to do what? To go down, to go up. You see, this is how the market broke. It came down here, came back and retested, and this is where I'm most likely to place my TP. But in case the buyers have the potential, the sellers have the potential to continue pushing the market toward the downside, then I can continue holding this market. But at the end of the day, you realize you don't have to switch the strategy. It still works, only that you have to wait for the market to favor you, and not all the time it will give you exactly what you want, but it can give you the opposite, but it is the same thing. So if ever the sellers come to want the downside, they break. Now we can continue again. I've already said that is how we will create new lower low and lower high. But for now, you already have your TP there. And if you measure what was my stop loss, your stop loss should be around maybe 40-50 pips, because you are not scalping. You see, your stop loss should be around 40 pips, and your TP, that is around 94 pips. So at the end of the day, can you see how that market moves? And I was using the same strategy. So it is easier for some people. They will say, no, I want to change my strategy because I've failed on this one setup, forgetting that you don't have to. It was only on that pair that made it look like you don't understand, but it is the same thing, because if you are not buying, then you are selling, and you are using the same thing. So thank you so much for watching today's video. Until next time, bye bye.